Look at the market. Look at the daily chart of the market. What was I saying to do this entire week? Sunday, I said we were going to have a bearish end to the week. I was saying that on Wednesday, if we're above 437, I'm getting into puts. Wednesday after, right when the market was about to close, what did we do? We got into puts. You know why? Because this goddamn move to the upside was not going to sustain itself. 9 green days in a row, 8 green days in a row, guys. Are you guys... Come on, guys. Think logically. There's a reason why I was leaning short. This is that reason. Big, solid, ridiculous red candle straight into your, and yeah. So in today's video, we're going to take a look at what the next steps are for the market. All right. Obviously, we nailed this trade perfectly, but we have to look at what the next steps are. All right. So, guys, not to rub it in anyone's faces or anything, okay? But you have to take the highest probability risk reward trade every single time you step into the market. Every single day you enter the market, you have to take the highest likelihood trade. And regardless, these last few days where we were moving up like an ant, little baby steps to the upside, you think that was going to sustain itself? What was I saying? A bull flag that where we move upwards, a bull flag slanted upwards is bearish. That is not sustainable. Like I was saying yesterday, usually bull flags either move downwards so that it gives good, healthy dip buying opportunities. What damn bull flag has anyone up here trying to go long that didn't want to lean short? Absolutely, guys. Like this is what happens after a huge move to the upside. You guys just end up like getting played by the market. Enough is enough. Enough is enough, guys. Just listen to what I'm saying. Just listen to my advice. Honestly, obviously this isn't financial advice. I'm not your financial advisor, but listen to things with an open mind. All right, that's it. Okay, I'm done. Now let's go ahead and take a look at the rest of the market.
Oh, good luck on your puts. Oh, good luck on your puts.
Bozos. All right, now I'm done. Okay, let's go ahead and take a look at the rest of the market. All right, first off, I want to start off by looking at seasonality. So we remember how in the beginning of November, we have a huge move to the upside, right? And that's exactly what ended up happening here. We had a huge, there we go. We had a huge move to the upside, right? And then we had a bit of a pullback. So now we basically need to see if the market is going to continue pulling back or we're going to chop around a bit more, okay? But this was that pullback, completely in line with seasonality so far, okay? All right, number 2, this is a chart of the VIX on a daily chart. We know that the VIX has an inverse relationship to the market. When the VIX is falling, that's good for the market. So today, the VIX was making a falling wedge. This is the opposite of what the charting pattern of the SPY was. So the SPY was rising and it made a stupid rising flag, right? This did the opposite, right? So it fell and it did exactly what it needed to do for a bullish move. When you see a setup like this on crypto, especially on Bitcoin, this is usually a very, very good bullish setup. So the VIX, this looks like it could continue up. Okay, so we need to see how it responds when it comes and retests this trend line. But generally, this could continue up into tomorrow as well. So just keep that in mind. With the VIX moving up, obviously, that is bad for the market because it has an inverse relationship to the market. Next, let's go ahead and take a look at the bonds. 30-year bonds. Okay, this is also important to look at because it has an inverse relationship to the market. When the bonds are rising, generally it's good for the overall market. As you know, TLT has gotten a lot of love recently on Twitter and things of that nature because it has a correlated relationship a bit to the NASDAQ, right? So what we see here, a little deeper dive on the bonds, is that we opened outside of the upper level of the Bollinger Band on the bonds. This shows extreme overextension. So this was a very, very bearish signal. When you open outside of the upper bands after a monstrous move to the upside already, that shows extreme overextension. right? So basically, when we are algorithmically overextended to either the lower end of the Bollinger Bands or the upper end, we return back inside. So this was just a return back to the mean price. So that's essentially, we came back within the Bollinger Band, within the algorithmic pricing of where the bonds should be. So now this setup is really, really ugly. This is a really, really bearish setup. Okay. And this is generally a very, very bearish setup. What could end up, I would be, so essentially, I'm there's a very high likelihood that we make another low on the bonds. Okay. But the bonds are not as strongly correlated to the overall market day to day. So we would need to really have a strong move to the downside on the bonds for this move to start showing in the overall market. So what I personally think if we end up breaking below this support level, then it would really help pull the market down. But overall, this is a very bearish setup on the bonds, and the VIX looks very bullish. So both of those things are bearish so far for the overall market. Okay. Next, let's go ahead and take a look at the dollar. Okay. So now the dollar is important because it has a inverse relationship to the market, similar to the VIX. If the dollar is falling, then that is good for the overall market. Okay. But as we can see, sometimes when the dollar, it's not always perfect recently either, but what we saw was a big move to the upside on the dollar, and that really helped pull the market down. So to see how much more room we have to the downside, or have to the upside here, you could take a fib level from the most recent highs to the most recent lows, and now we can monitor it like this. You could see that it stopped perfectly at the 50% fib. Now, for this to continue, obviously, right, we need to break above the 50% fib. But what's more important is that it needs to remain above the 38.2% fib. And most importantly, it needs to remain above this zone between the 22.6 and the 38.2. If it can do that, then that's very, very bullish for the overall market. Sorry. Whoa. That's very, very bullish for the dollar. And then that would be very bearish for the overall market. Okay. So once again, if the dollar continues up, which it doesn't look as strong as the VIX, but if the dollar continues rising, there is a high likelihood chance that the market will end up falling. Okay. So just keep that in mind. The dollar isn't as conclusive as, what the VIX and the bonds look like currently. Okay. So last but not least, let's go ahead and take a look at the yields. All right. So the yields are very, very important because they also have an inverse relationship to the market. Now, looking at all of these things at the same time, it's very important because it gives you different data points. We don't just look at one stock chart and try to assess our entire bias off of that stock chart. We look at every possible situation, every possible scenario, and then we make the best decision based off of multiple data sources. So the yields are important because they have an inverse relationship to the market as well, similar to the VIX and the dollar. So if the yields are rising, then that is generally bearish for the overall market. Okay, so this, we could also put a fib level here. And you could see that we held and broke above the 22.6. Generally, we should retest also the 38.2% fib. And if we continue rising on this, then that is bearish for the market. So what we really need to see is, so generally, the rule of thumb is you don't go long at a level of resistance. And currently what we see here is that we are currently at a level of resistance. Right? Pragmatically, we're at a level of resistance on the yields. So the best situation would have been to go long over here. But now, people trying to knock into this level of resistance could end up just being this could end up just being a bull trap. But nonetheless, this is a bullish reversal. To say otherwise would be ingenuine. And the most important thing is we want to see prior levels of support hold on the yields. But most importantly, when you have a big green candle like this, what you really want to see is the essentially, ideally what you really want to see is the 50% of this candle hold. If the 38.2 or the 50% of the candle can hold, then this can continue going up. And if this continues going up, then that is bearish for the market. So the bonds look the most bearish, the VIX looks the most bullish, and the yields look pretty bullish as well. Let's take a look at the larger term yields. Same concept. We're at a level of resistance on the 20-year yields. Let's take a look at the 30-year yields. Same concept, right? So another thing that you could have seen on the 30-year yields is that we opened outside of the lower Bollinger Bands on the 30-year yields. This is basically the same concept as the bonds, right? The bonds are the 30-year bonds. This is the 30-year bond yield. So that's why we saw the bonds opening outside the upper level and the 30-year yield opening outside the lower level. So that's, it's just an added way to show the bearishness. So this is, once again, this is pretty bullish. And generally, when we open outside the lower level like this, on stocks, especially on large cap stocks, it would be very, very unlikely that we end up making a new low. What ends up happening is this should continue up. So if it continues up, then that's bearish for the overall market. Okay, so there's that for the added extra bonuses of everything. Next, let's go ahead and just scroll through all of the large tech stocks. All right, starting with Apple. Apple obviously had a bit of a red day, and it still held up pretty well compared to the overall market, but we could not break above 184. So we ended up touching exactly at 184, and I was showing how 184 was going to be a major level of resistance. We wicked up to that level and we failed, and we painted a nice red candle. Next up, Nvidia. It does not look like it should continue like this. So we wicked outside of the upper Bollinger Bands, which is obviously bearish given the fact how high we rallied up, right? But we didn't close outside, we didn't open outside, so it's not inherently bearish. But intraday, we really wicked to the upside on tech as well. So showed a lot of strength, and we painted a bearish candle here. What should end up happening is we should at least come and retest the trend line tomorrow, and that trend line is going to be at 464.30. So if Nvidia falls, obviously it's not bullish for the market. Nvidia should continue falling here. Let's take a look at AMD. AMD looks really dumb. AMD is the equivalent of what the SPY is doing. It's making a really stupid flag like this, and it needs to fall lower, in my opinion. I would be surprised to see AMD make a new high off of this. So if Nvidia is going to fall, AMD should also fall. So that's another bearish thing for the overall market. And another important factor that you have to look at in the market is on days where Tesla is up or down 5%, that is a very big indication of where the overall market is going to be. Okay, so Tesla was down closed 5.4% today. Okay, and almost filled the gap. And we need to see if this is, once again, this is not a bullish setup. It should continue falling lower. And then what's most interesting though on Tesla is that the lower Bollinger Band is pointing upwards. So that's pretty fun to look at here. But Tesla is not looking too good. Let's take a look at Amazon. Amazon, most importantly, after a big move to the upside, right? And it started to stagnate a bit, right? When you gap up after it starts to stagnate and trickle out, like, oh my God, are we going to break out to the downside or the upside? over here, right? This was like a lot of people's thoughts. If you end up gapping up, that is not bullish. That is a sell signal. And for people to become bullish over here is absurd. So that's another reason why Amazon ended up pulling back. What should end up happening is Amazon should fall a bit lower, in my opinion. We're still very, very overextended. Just taking it from close to close, from these highs, this is still a 20% move. So it needs to pull back just a little bit. This is not sustainable, like I've been saying. So it needs to pull back just a bit. I'm not overly bearish the overall market overnight, but actually I don't, I'm not holding anything, but I'm not holding any puts overnight. But yeah, this is not really like a good setup. This is not a bullish setup, is my main point. Okay, next let's take a look at Netflix. Netflix painted a little top. Google also obviously did not do too well. Microsoft, one of the biggest winners. It's been showing a lot of strength recently, and because it's been showing a lot of strength, it didn't get a big pullback. And that's why I was hesitant to short Microsoft, because even if we did short it, we wouldn't be able to time the short based off of the institutional buying pressure that Microsoft was having. So this was not really the best opportunity to short, but it was showing extreme overextension in tech. So the fact that this was happening was a good indication that it was time to start leaning short. Okay, because this sort of strength, it needed to start permeating into the overall market. And it was, but it's not sustainable, because Microsoft isn't going to sustainably be able to trade outside the upper bands, right? So if it's not able to sustainably trade outside the upper bands, it needs to have a bit of a pullback. And the lack of strength in Microsoft continued. The lack of continued strength out of Microsoft also led to the overall market falling. All right. That was all of, we didn't take a look at Meta. So Meta wicked up, and just this actually still did pretty well comparatively, but it wicked up, and this is not the most bullish sign. So overall, these large tech stocks are not looking too well. We should get a bit more of a pullback. I'm not extremely bearish anymore. We should get a small pullback. So when we're taking a look at IWM, right? The IWM, it came, like I was saying, we were going to retest 167. Now we need to see how it's going to respond if we can fill this gap over here at 165.50. Okay. And then that would also end up. So here's the thing. I don't think we have another 1.5% red day tomorrow. What could end up happening on the overall market is we could end up just bouncing a bit, and then we just have to see, because if the Russell bounces off of this level and it hits 168, 169, then we have to see if people are going to reshort and then fall lower. But right now, entering short is really risky on the IWM. Okay, so because it's really risky to short the IWM, the reason. So look, guys, let me take a sip of my coffee. So look, the reason why we're looking at the IWM is because the IWM helps move the SPY. So we're looking at the IWM, and if this is not the best opportunity to short, even down here, it's not really a good opportunity to short. This begs the question, okay, if it's not a good opportunity to go short, then it would need to bounce for a better opportunity. So on this bounce, are we going to show some bullishness out of the market? That is the main question. So if we end up continuing to fall, spectacular. But most likely, we should get a shallow bounce. I'm not really a shallow bounce, and then the market is going to make a decision at a level of resistance. So that's that for the IWM, which is interesting because the IWM has been the biggest loser recently, whereas it was the biggest winner. Into the end of October, early November, it was the biggest winner. Now it's the biggest loser. So we need to see. I doubt that this loss is going to continue at the same brevity, right? So let's take a look at the NASDAQ. The NASDAQ just loves its trend lines. So we are at a major trend line level of support. It needs to hold above basically 369.80 tomorrow for this trend line to remain intact. Now, the interesting part is that a lot of these tech stocks are either going to give a shallow bounce or they should continue falling lower. So overall, guys, this is not a time to go long, in my opinion, on the NASDAQ. This is not a long opportunity. What would be a better long opportunity is if we break above the uptrend level, which is this red line here. So the uptrend level is at 371.20. Even that, with this major red candle like this, even that, once you hit this, it becomes really good shorting territory. So if you look at this fib level, it's going to coincide with the 38.2% fib. So this, at the 38.2% fib, once we bounce back up to that level, it's generally it would be a good short. The 38.2 or the 50% fib would be a good shorting opportunity for a continued move down. Going short here would be a bit risky because it's, you would need to hope that it remains below 372. So if you went short at close, you want it to remain below 372 for it to continue the momentum down. But if you're waiting, then you're waiting for a bounce up to a level of resistance over here, and then you want to go short. So, it's an interesting little spot. Or, you could have just been smart and went short yesterday. So, yeah, that's the conundrum of trying to enter the market late. But yeah, that's that on the NASDAQ. Overall, based off of what we saw with the VIX, based off of what we saw with the dollar, the yields, and the bonds, all of them are basically either really bearish for the market or they're giving an opportunity for shorts to re-enter. So the dollar looks really bullish, right? But I wouldn't be surprised if we have a bit of a pullback and then a continued move up. The VIX looks really bullish, right? We saw that falling wedge, but I wouldn't be surprised. We have a green candle outside the falling wedge, right? But I wouldn't be surprised if we came back, retested, and then continued up. So things are setting up for continued bearish moves. But the question is it going to just all in one shot happen tomorrow? That I can't say definitively. So, but this is a bearish end to the week. And I wouldn't be surprised for it to come back, retest the 38.2% fibs, and then continue lower. Because this is a really bearish setup. This chart pattern right now on the NASDAQ is very, very bearish. We close below major levels of resistance. We close below the 786% fib of this entire move here. And we're barely holding on to 370. So if we break below 370, 368 is going to be the next major level of support. And we're going to have to see how we respond at 368. Next, let's take a look at the SPY. My lovely SPY. So the SPY broke below the trend line. Whereas we saw the NASDAQ holding the trend line, the SPY ended up breaking below the trend line because the IWM was also showing a lot of weakness. So as you can see, the IWM is the biggest loser. That helped pull the SPY down. So now the SPY is trading below this trend line. And, all eyes are going to be on 432. If we can hold 431.60, I would be surprised if we end up I would be very, very shocked for us to break below 430. I'd be pretty shocked if we end up breaking below 431 tomorrow. Because if that ends up happening, that would be pretty insane, to be honest. But let's just be fair and look at the fib level for this move so far. Okay. So zooming out, let's make this a bit here and add that there. The 23.6% fib from the lows would be at 431.50. That generally gets touched. So 23.6% fib I'm looking at. I'm looking at the 23.6% fib because those are generally very high likelihood chances that we touch. So based off of the complete lows, we've already we're still have some room to go. Based off of the initial move upwards, right? You could see that the 23.6% fib ends up pointing to around 432 to 432.50 here. So that is really going to be a major zone, and that is a very high likelihood chance that we end up touching that for sure. Like, that's a very high likelihood chance that we end up touching. So 432, 432.50, yes, we could end up touching that level, but then we have the gap to fill at the highs here at 431. So that's going to be interesting because this is, again, a really bearish setup, and then it just becomes a matter of how much the momentum to the downside is going to continue. We got a nice little failure here at resistance after a continued move. After a continued move, we're going to have to see if we could make a nice base of support. If we can do that, then we could launch pad off into the end of November and continue on with this positive seasonality. So if you're looking at this on a weekly chart, it still flabbergasts me that people were bearish last week, man. Like, on the weekly chart, guys, just look at this on a weekly chart. We were trading outside the lower level of the Bollinger Band on a goddamn weekly chart, bro. Like, can you imagine being short when we're that overextended on a larger time frame? Not just a daily. We were overextended to the downside on a weekly chart. Come on, guys. Anyway, on a weekly chart, you could see that we're also, like, this level is still holding really well. But overall, it's just looking at this large green candle. It makes sense for us to at least touch the 30% fib, 38.2 or the 22.6, and come back and retest a little bit below the trend line. We could even touch the 50% fib. So that would be around 428 to 430. And that's completely fine. Even if we do touch that, that would make a solid. So going back to the daily chart here, that would finally actually make a solid sort of bull flag where we have like a tangible, intelligent market structure where we fall again, make a bit of a bull flag, maybe chop around a bit, and then bounce. So I'm expecting these next few days are going to be choppy, but I'm going to be leaning a bit bearish once again because just this momentum, this selling pressure, I'd be shocked for it to just about face. But overall, you know, I'm not holding on to puts, and the puts today ended up doing really well. Everyone that was holding on to them, congratulations. But yeah, good job. But yeah, so yo, that's my thought for the SPY. I hope you guys enjoyed today's video. Please make sure to like, comment, subscribe, do all that good stuff, and I will see you guys bright and early tomorrow morning. Thank you.